Hi, good evening. Today is Monday, June 21st. Today was a great day, a great lesson in market deception, as Victor would say, as both bonds and stocks had sharp reversals. I got lucky with my prediction on Friday that we get a gap down Sunday night, which we did, and that was clearly a good trade. I wish I could say that I was holding it for almost 100 points. I did not, but nonetheless, we had almost 100-point rally since this low. And now we're back exactly where we started before the Fed announcement. That 42.22 sort of level, we are just a few points below it. It's where we sold off when on Wednesday after the Fed announcement. And now in today, in just one day, we have pretty much closed the gap and back at that same level. So what now? We had lots of backpedaling again by the Fed today. It's almost like somebody had a talk with Bullard over the weekend, and he was back on Monday to reassure the markets. He said that the committee is only now starting to talk about tapering, and it will take some time to get that up and running. Bullard also said that low interest rates and low inflation rate era is not ending anytime soon. And the market is very happy to hear what he said. And we have rallied all the way back to the same Fed level. And 42.22, 42.28, that's the kind of area that I'll be watching. And if we do break above it, then I see the all-time highs will be pretty much very soon. But on the other hand, where this week is a little bit has a little weak seasonality. The week after the expiration in June, it's a little weak seasonally speaking. So I don't know if we fail to break out above that 42, 22, 28 level. We may have sell off tomorrow to 41.85 level, which I think it's Andy was saying it's the vol trigger level. So as we were saying, if it sells off below it, I don't expect necessarily to have this happen tomorrow, but I wouldn't be surprised if we test the Sunday night after hour low 41.26 that we made after hours in the next couple of days this week. But like I said, it all depends what happens at the 42.22, 42.28 level up there.
And of course, we saw, as you already mentioned, a big sell-off in bonds. Actually, it was a big reversal in bonds. This was TLT, but if you look at the
right, the futures had an insane day. I'm sure all the short sellers have finally been stopped out. If they haven't been in the last 2 days, today definitely was. And the second day, the last seller was out, of course, they have reversed, and the market often does that.
Oh yeah, so it was a very I think, and it depends on, I'm not sure that this that kind of the risk on that we've seen in a lot of the inflation-based trades is coming right back. I think it'll be a little bit more choppy, is my take, but certainly the Fed is not talking in a hawkish way, except, there were some hawkish interpretations of what they said this last week, but it wasn't really a hawkish statement, and their policy isn't changing to be more hawkish yet. So, so we saw what I thought was interesting, similar to really the opposite of what we saw in bonds, is pretty much across the board. We saw a lot of the commodities, and maybe something like lumber is a better example than some, where we saw in the morning continued sell-off, but then a bounce in all of these. And something like crude oil, that
right, oil was up almost around 2.5% today.
Right,
new highs yet again.
And we didn't see some of the. We saw some followed through, and some of the energy stocks, the more kind of like marginal energy stocks like EOG, which is more fracking oriented, and so they're sort of marginal supply. But I think maybe some of the other energy stocks we didn't see quite the follow through with them as what we saw on oil, which is maybe a little bit of doubt still in the market about whether this rally can be counted on.
Right.
But
And another, go ahead.
Gold and silver I think had okay rallies today as well. They really just moved the opposite of what we saw in bonds in the dollar, but they bounced off the recent lows.
Right. So the question still remains whether the inflation trade is dead or not. And the Fed speakers keep saying that the inflation is transitory. Today we had Williams who reiterated that point. He said that prices should not increase due to increase at recent elevated rates once they have fully adjusted to the reopened economy. And he also said that he sees the economy growing 7% year over year. So pretty much all Fed speakers are saying that the inflation is transitory because it's reopening. And once that kind of balances out, maybe the inflation would be more subdued. We shall see in that.
Right. And what I see my interpretation when you hear about these like supply shortages, my interpretation of that is it's a reluctance to accept that inflation is coming, because for many years we've had this low inflation environment, even if the Fed is flooding the market with money, like after the financial crisis. And so even in that, there wasn't a big inflationary wave, even as they were pumping the economy full of money. So the question is whether these like transitory supply shortages are just an indication of the reason the supply shortage exists is because they're not willing to pay higher prices yet, and for what the good actually, they're looking for another source at a lower price and so on. But I don't think it's entirely clear. There's not a lot of data that answers that question. Some like prices paid, there's prices paid data, but that's more backward looking, and it's harder to really know whether these supply shortages are really transitory or whether they're real. And I think policymakers don't have a lot of visibility on that.
Right. And well, it's interesting what will happen with labor, because labor, at least in US, it's one of the largest component of the costs. So as of right now, we have labor shortages. People cannot hire people. And the same thing, as you said, nobody wants to pay that much higher wages. They're just waiting it out, hoping that unemployment benefit runs out and people will go back to work, which could be the case.
Well, that's many there are many restaurants that are running on reduced hours just in like the New York area that aren't fully reopened because they can't. I mean, every restaurant I've been to, they've had signs up that say that sorry for our staffing issues, and people were laid off or whatever during lockdowns, but they have chosen not to come back.
Well, some of them probably moved to Florida or Texas, where they could be working for the last half a year.
That's right. That's right. And then they find, oh, it's a lot cheaper down there without a state sales tax. And that's right.
And cost of living. I mean, just renting an apartment in New York and commuting on subway versus having a car and a house, or even just a large apartment in Florida. And waiters pretty much make the same amount of money and pay less tax. So, New York City really needs to up their wages game in order to attract people, I think. So that could be a little different situation.
Well, there's I think though, one of the maybe underestimated parts of this migration that's happening is that, as we know, over the last year, with the kind of aftermath of George Floyd issue incident, and then riots in the cities, especially in a city like New York or Minneapolis or Seattle or Portland, that it created maybe, and we've seen crime go up in a city like New York, where it's even a major issue for the Democratic candidates. They're going back and forth on this issue, and so it's very, very present, and people are more aware that the city's not a city like New York or some of these other major cities aren't as safe as they were. And well, if I move to whatever, Fort Lauderdale or to Dallas,
Right.
then I can live in a
Where
safe
people
neighborhood.
actually prosecute crime, as opposed to the videos that are surfacing in San Francisco, somewhere in California, where a guy just basically comes in with a plastic bag, just pulls everything from the shelf in a bag and drives off in a bicycle. And New York City, just recently, there were news that they're not going to prosecute the looters, which I guess they call them peaceful protesters, the ones that broke into stores, stole millions of dollars worth of merchandise and produced other obvious damages. And now New York City decided not to prosecute them. So why wouldn't they do it again when the crime literally pays? And you
Right,
get
and there were
your
many
record.
businesses. I mean, there was you're referring to the story that was in the Post about, or that might have been covered elsewhere too, that there was something like 300 people that were
Yeah.
charged with a crime of either vandalism or looting or whatever, and they all the whole cases were just dropped.
Right.
And what
Incredible.
part, part of this is that as COVID, so this was like in April or May of last year, that the mayor, Bill de Blasio, released, and this was right before the whole thing with George Floyd and so on. But de Blasio released 1,000 prisoners from Rikers Island, which is the main jail for violent criminals in New York City. So there's other jails, there's, like one's Manhattan and so on, but this is where once someone's been convicted of a crime, they go, and it's like a maximum security facility. But 1,000 prisoners were released from Rikers within just like a few weeks of it, in advance of what happened with George Floyd. And so you have these people that are, I mean, they're career criminals, so to speak. So I think that in New York, at least, it made whatever happened with regard to riots, it made it a lot worse, because it wasn't like people that were just out and they were like the narrative was they were upset and so they smashed a window or something like that. And not
Right.
that that's good, but it was, people were showing up with like professional demolition tools to
Right.
break into
Exactly.
stores, and they were showing up with sawzalls and things like that to cut through gates and so on. And so it wasn't like, it was like, well,
It was
I had
premeditated.
ordered this special, and they were showing up with special tools to break in.
Right,
Yeah.
premeditated. They would remove plywood so they could break in and so now they all let go. So what kind of example does it set? I mean, there is such lack of basic common sense and common logic that just a couple of years ago was considered to be normal to prosecute for crime, and now we no longer do this. So what more?
Right, and I think that it's well, but I would say that part of there were some prosecutions that were happening at first, but then there were protests in the midst of all this in the city for Bill de Blasio. I mean, from people from the left that were protesting him prosecuting anyone, and as a result of this, when I mean, there were like the Macy's in Herald Square was
Yeah.
completely trashed. It was just emptied out, and this is an enormous. It's like their flagship store for the whole country, and it was basically emptied out. And there were the people, all these prosecutions that were dropped, it was mainly in the Bronx. And these are not like wealthy shop owners or something like that. They're people that are just like a family store, and they're just getting by on their store. And their store was, you know, completely looted or trashed or something. And maybe they have insurance, but maybe they don't, or maybe it's, you know, it would take
Even if
countless
they had
hours for them.
insurance, even if they had insurance, they're not going to have it next year. That's for sure. No insurance is going to give you insurance after such huge payoff. That's like another scam. You know, you can only get insurance if you don't claim it. Just try claiming it a few times, and it goes up so much that it becomes not worth having it.
Right. And well, that was, I'm just saying
Right.
there's no, I mean, these people, poor store owners, have no recourse,
It's
and
absolutely
they're
necessary.
just out of luck, and there's no prosecution, and so
Right.
how do you
Yeah.
ever recover anything?
And instead, what we're doing, we're unveiling a statue to George Floyd. It just in Brooklyn or in New York, I'm not even sure they have one or two statues. I lost track personally, but there is at least one or two statues in New York City to George Floyd. So
Right.
now we're celebrating literally uh, dealers and drug users and completely deadbeat delinquent. That's not to say that his death was justified or unjustified, whatever. That's up for the prosecution to decide. But still, the guy's life was not an example how you, if you ask anybody, do you want your son to grow up to be like George Floyd?
No.
Nobody would say, yes, this is my dream child. And so why are we celebrating? Why are we not teaching children to be astronauts, or at least Elon Musk, not George Floyd?
Or, you know, the you know, what my view has been is that, as was the case with, this is similar to the case of Michael Brown, going back to Ferguson in 2014, where, I mean, he was beating up a store owner after he stole things from that store. It wasn't like he was
Right.
a nice guy, and nobody was claiming that. And then he ended up charging a police officer and getting shot by that police officer. Well, um, the the issue, and then there were riots and so on, but the issue that I took away from that was where, like, the police were showing up with these armed transport vehicles and things like that. Like, well, maybe we ought to, maybe there are a few police practices we ought to look at and be like, okay, yeah, we don't want to militarize police force and so on. But when
But defund the police is not a solution either.
we're, oh, but well, all I'm saying is that I'm, you know, I'm very open to the idea that policing could be improved, or that there could be things that are make it more fair for everyone, and that the police shouldn't be harassing people because of whatever color of their skin or something. And things like body cameras are a great way to show that's not happening, right? And but it's like that wasn't the real reason for the riots, or the riots wouldn't have continued, right? That they continued. And so it's,
Yeah.
I you know, it's
That's lawlessness. Like Chicago is another example. Just this weekend, a couple was dragged out from the vehicle, and somebody filmed this whole thing, and the poor
right.
couple was executed in broad daylight. And and that's in Chicago, where they have the strictest gun laws in the country, probably.
Right, and they were, you know, they were, there was like, it was Juneteenth, but then they were flying Puerto Rican, it was like Puerto Rican Day or something
I
like
think so.
that in Chicago, and they were flying this Puerto Rican flag on their car, and evidently that was enough to, you know, enrage somebody to
Right.
kill them. And uh,
I
what,
wouldn't be surprised if the guy who executed them is actually out on bail for some previous violent assault.
well, I'll, if I can though, I'll relate it back to like the economy or inflation. That I think that my view is that part of what happened in the 70s, it wasn't, well, sure, we got taken off the gold standard in 71 by Nixon, and that weakened the value of the dollar. But what it really was is a series of things that undermined the feeling of trust of the government and of society. And so United States, Watergate, United States having to withdraw in shame from Vietnam. And then, one humiliation after another that was happening on the world stage of the United States. And I think that these things, what might have been a mild inflation became a very severe inflation. And I think we're seeing some of those mistakes repeated now. And like the feeling that the cities are more centers of crime than they were a decade ago. New York City is not the safe city that it was under Bloomberg or Giuliani, and that you can't trust the police to show up and make sure that your block is safe or something. I think all of this contributes to a feeling of distrust, which feeds inflationary pressure. And
all we need is an oil shock, right?
Right. Well, and
we're on the way too, yeah.
And so this is true, I think, in other situations where in the Soviet Union after the Civil War, the Bolsheviks, they didn't prosecute crimes and things like that, and they would let criminals go. And there would be a very high crime rate that would be, of course, underreported, but it was all deliberate to make people clamor for more, a more aggressive government. So they, so I think there are a lot of maybe negative historical parallels what we're seeing, and I think it does have an effect on inflation and inflation expectations in the long run.
Well, all we need is an infrastructure bill passed.
Right.
So I think that's going to be a very important thing on the inflation, if it passes or not, because if it does, it also would produce lots of inflationary pressures, of course.
Yeah. So maybe I'll talk about the one so that we don't spend too much time. The one area where I think we've seen the opposite of a response to some of these inflationary pressures is in crypto, where we've seen, it's just been a really nasty sell-off here.
Well, we had the whole timeline was bombed by China news over the weekend. There were lots of negative headlines on crypto and Bitcoin in particular. The Chinese wants to close some mines again and some regulatory scrutiny. Then they also said that central bank would prohibit banks from offering financial services for trading crypto. Like banks and payments must not provide services, including opening accounts, registration, transaction, clearing, and settlement for cryptocurrency related speculations.
Well, and they're clearly, being very serious about shutting it down. It was this sort of thing that was always said, but never seriously pursued by China in the past. It was like, the joke was almost like, oh, China's, banning crypto again, for a second time in 3 months, and they never acted on it. And now they are acting on it. But I think that in the end, it will work out better for Bitcoin, for crypto in general, because one of the big, I think, true negatives was the concentration of mining in China, and that it was very dependent on like cheap Chinese power and the Chinese government continuing to kind of quietly allow it to happen in the background. But what this will mean is that the distribution of mining will be much more geographically distributed, and a lot more of it will come to the United States, because one of the other issues that's been raised, it's sort of a bearish pressure on Bitcoin, especially, is that the idea that it's consuming dirty power or not clean power, and clean power is a lot more available in the United States than it is in many other countries, maybe Western Europe, but power is much more expensive in Western Europe than it is in the United States, because you have eight big solar farms and hydropower and Pacific Northwest and so on. So I think a lot will come to the United States, but then there will be some other countries that will welcome it. And well, like El Salvador, run it off of geothermal or whatever, but there will
Like
be other countries.
Kazakhstan, some of those mining firms are moving to Kazakhstan from China.
Right. But so I think that the China news, it'll eventually, the big negative, of course, it's not the Chinese government shutting down miners and the hash power and so on. It's a sense that there are those people, the Chinese people will never become users, or it will take a very long time for them to become users. And so that's, whatever, 1.5 billion, 1.4 billion people that are potentially, that in the past, they've been rapid adopters of cryptocurrency, and they just wouldn't adopt it at all. And there are cryptocurrencies that they compete with Bitcoin. Like Litecoin was originally a Chinese kind of version of Bitcoin, and it became more than that, but it started as that. But then there are like Chinese competitors to Ethereum, and evidently all of those are being shut down, even though they might have been might have created hundreds of jobs or thousands of jobs in China. So for whatever reason, they see this as a much bigger threat than whatever benefits they get from the jobs and the economic growth.
Well, maybe they just don't, maybe the Chinese don't want the capital outflow, and Bitcoin is an easy way to do that.
Well, but let's put it this way. If they, if they were to create which they did, they created something called, it was originally called Ant shares, and then it became called Nano. And then there was another one, Neo, that they were like Chinese version of Ethereum. And let's say that they decided to be nationalistic and say, well, Neo and Nano and these others are okay. They're good crypto. They're Chinese crypto. They help our economy, all these things. Had they said that, then there would be capital inflows, because there would be a certain number of Western investors who would gladly put their money into this. If it's got a potential user base of a few hundred million people, it could be very profitable. And so things like that. I think that I think that it's just, well, China has never had technically a convertible currency to any other currency, right? It's not convertible to the US dollar, even though it's pegged. It's not like you can just go to whatever, a bank and get Chinese yuan or an MB yuan paid out to you. You actually have to go to in China, you have to get it there and so on. And so it's they have very tight capital controls, and I think they're just, they don't want that whatever that influence at all. But I think it's a big mistake on their part, because they have a lot of good developers and people that understand this space there, that they're basically going to limit a kind of economic growth and technology development, innovation that could exist, that wouldn't threaten their currency, as long as they're framing it the right way and the regulations are done the right way. It wouldn't threaten their currency or make people use something, to replace Chinese yuan, but they, for whatever reason, they've taken this stance. It could play out and continue to weigh on the market for a little while.
Well, I mean, to me, the way I see it is, it's not that China banned it or tries to ban it, is that Bitcoin is not as immune to government intervention as it was thought to be by some people. For example, what stops US central bank from doing the same thing? If all of the European major countries and US central banks would decide and do the same exact thing, if they ban US banking institutions to accept or transact or otherwise deal with crypto, that would be a devastating blow to crypto. Obviously, it could still exist crypto to crypto, but it will be a lot harder to do crypto to USD transactions if this were to happen. And so
Well,
Chinese just showed an example of how you could really wound crypto.
well, why would they do that? I mean, I guess,
No, right.
well,
They could.
I'm just asking, like, okay, so that I just mean it like this, that see, I think that there's a lot of like semantic confusion about what uh Bitcoin is. I mean, people, the term cryptocurrency implies that they're all currencies and that they're all intended to be competitors directly to the dollar and not just an alternative store of value, like gold. I mean, if gold were not, I mean, Bitcoin has certain strengths or advantages over gold, like the fact that, I mean, if I wanted to carry uh, whatever,
A few billion in
$100,000,
gold, it's
right?
absolutely.
$100,000 worth of gold, I'd be weighed down. I wouldn't be able, I'd have to carry a bag or something just for that amount. And with Bitcoin, it exists on the
Right.
internet and in the ether, and so the so I think that it's an asset class that then has inspired a whole set of other legitimate crypto. Like, I mean, there are, as people say, shit coins. And I don't question that there, there are a lot of those, or that even most of them are. But I do think there are, a handful where they're serious projects and they have a lot of developers and not just BS. And they're trying to do something other than compete with Bitcoin. They're not trying to, like Ethereum doesn't compete with Bitcoin. And two, they're not trying to be a better dollar. They're trying to do something else, like be a platform for financial innovation. And so that's what I think the like calling every cryptocurrency. It's name that Satoshi Nakamoto and Hal Finney used in the early days, and I'll continue to use it. But at the same time, not everything is intended to be a better dollar or a super dollar or something like that. And I think that creates a lot of confusion, and so that's part of my view. I think that there are enough people in the regulatory apparatus in the United States that actually understand this to some extent, like a Gary Gensler, who's the head of.
Right. But are they willing to just sit back idly and do nothing when Dogecoin, as my favorite example of, I call it politely alternative coins instead of SH coins. So Dogecoin is today down 32%. It finally broke the 20-cent level all in one day after breaking 30 just 2 days ago. And now it's on the way to 10, maybe tomorrow, who knows? But it's clearly back, it's moving back down into the trash can where it belongs. So is SEC just going to sit idly while Elon Musk was just pumping this from a few cents to 70 cents and then back to trash? And lots of people followed him and lost money. And obviously Dogecoin is just one example, but it also exemplifies that to the general population. And so
Well,
why
how
would
is this
they do
any
nothing
different from
like
a penny
to
stock?
protect the public? It's different only to an extent that when did you hear about some penny stock pump and dump on CNBC lately? You haven't, because they don't care. But you're absolutely correct. The only reason this is in the news because it is in the news, right? So, but because it is out there and everybody knows Dogecoin and everybody heard about it, it's all over. That's why they have to do something. Just like when GME was in the news. They had the hearings, even on the Hill, they had hearings about GME, GameStop stock. But why? Only because it was moving a lot and CNBC picked it up. And so some people lost money and some made money.
Well, okay, so I'm putting up to make my point My
No, you're
response.
absolutely correct.
Well, no, I'm putting up here the pink sheets. These are stocks. These are not crypto. The top one is something called bias space. I've never heard of it, but
Well,
it
but
was
the top
up.
one on the left is the grayscale, again, Bitcoin and Ethereum trust.
Well, but these are the in terms of volume, and these aren't. These are on the pink sheets because they're not ETFs, but
Right.
these are. I mean, I'm talking about these are so big deal. I mean, it's the top traded pink sheet. I don't even think it ought to be listed at all, but technically it's not listed. Just some brokers have chosen to allow it traded. It's not a listed, these are not listed stocks, right? These are unlisted stocks. But there are, these pink sheets, some of them are up, 31,000% today, just today, 9,900%, 4,900%. And so this is stuff that is a bunch of junk, that there are people that are working at these
Is the
shady.
volume 666 shares on the third one?
But you can look at some where I'm just saying. I mean, I'm not
No.
telling anybody to invest in this stuff. My point is that this has long existed, like the equivalent of Dogecoin
Yes, but
exists.
Elon Musk never tweeted about any of them. That's what I'm saying. I feel
Well,
like
well,
there's
why is why is okay? So, but here's the thing, that these are all companies, and whether or not that it's like a legitimate company, this whatever Dragon Jade, whatever it is, it has a headquarters somewhere, and it's got a CEO that's listed. No, I'm serious about this.
no, I know. I'm
They've
not
got a
making.
CEO, they've got a CEO, they've got a CFO, they've got a company address, they've probably even got like tax forms that they file and all that sort of thing. So they at least, like, they may not really have like a legitimate product or something. Maybe they do. Maybe they. I mean, some of these things that have come out of the pink sheets are legit companies. Like 1 in 100 are legitimate companies, but the vast majority are just these kind of shell companies. But nonetheless, there could be one that, they've got a board, they've got a CEO and all this. Does Dogecoin have a board? No. Dogecoin does not have a CEO, and it does not have shareholders even per se. And so
So it doesn't have a scapegoat yet. That's exactly my point. Is all of these companies, they have somebody to blame, but Dogecoin, it's like floating in the ethers, so to speak. And who's to blame? Well, Elon Musk, obviously. That it's like a famous
right.
target, and so he's been quiet lately. So my point is, the only reason they want to regulate it, I agree with you. It's no different from any of this trash.
But how do you regulate it? So see, here's the issue.
Right.
That so it's that that I mean, one, why do people need to be protected from their bad decisions? I guess is one
The
question.
world we live in, right?
Well, I don't want to be protected.
I agree,
Is
but
it a really a valid function of government to protect people from making bad decisions? I mean, people make bad decisions all the time. They buy a house that they can't afford. What should the government stop them from doing that? Like, oh, you can't really afford that house because if there's any repairs that need to be made, you won't be able to make them based on your income. No, they'll go right up to the 28, 36 income levels and let people buy much more house than they can afford. And that's embedded in federal lending laws. So they're letting people buy far more house than they can afford, take on way more risk. And these are hugely leveraged loans. I mean,
But that's
you're
because
borrowing
housing market
like
always goes up.
$10 on the dollar of the value of the house, right? 9 out of 90% of the value or something. So why is it, why is the real estate industry good to have good leverage? Why is that good leverage? And it's bad leverage when it's a speculative investment that's that's up this, it might work out, it might not work out. But the point is that the SEC has their mandate is to regulate companies that meet what's called the Howey test. And so what's the Howey test? Well, it's like there's 3 rules, and I'm not going to be able to state them like a lawyer, but the basic idea is that there is a company, and they have sold something, some item of value to people in exchange for money, and with the promise of a return on that investment. Okay. And so was that the premise under which there's not even a CEO, there's not a company? So, already the SEC has said that at least Bitcoin and Ethereum are not companies. They're not subject to the Howey test. They're not, they're not securities. But something like Ripple, where the SEC has actually sued them and is going in court right now, and a lot of and so what Ripple has done is, it is a company. It has a CEO. It has a board. It has all of these things. They even have equity that they sell, that they've sold. And on top of this, they sell this token that they sell amounts out of their treasury to fund the company on an ongoing basis. And people speculate on this. So what the SEC has said is that this is clearly a case where it's a company and you're selling a promise of some kind of return in exchange for your money. And you're selling off pieces of your treasury assets on an ongoing basis. And so I think that one of the things that's definitely going to happen is that there will be cases like that. I don't know how that'll come down. It'll all get worked out in court, but probably the SEC will win that case. And that will draw a line then that crypto, let's say, projects, they'll need to take a lot of precautions to not cross that bright line into being a company, or they'll need to just embrace that they're a company and follow all the right laws and so on. So that's one thing that I think is probably going to happen this year. And that will actually, I think, be a positive thing for crypto in the long run. It might be negative in the near term, like threaten the value of some projects, but I think it'll be positive in the long run because it will clear up this regulatory cloud, and there will be like a clear statement of, here's what you need to do to not be a company or to be a company. And you could go one of these two paths, but it's really clear based on what you do, and file this form for this, file this form for this. And
But I still don't think just a company or not a company is enough, because if somebody invented this Dogecoin like this and Elon Musk is pumping it, and clearly, if it could be proven, obviously big if it could be proven that Elon Musk bought it at very low prices, they pumped it up to 70 cents, went on the late night show, sold it before, and then it crashed back to where he bought it. If he profited from this, I'm not sure if it's technically illegal right now or not, but I'm sure it will be at some point, even though Dogecoin is not a company. It's still.
why, if you did that with gold or silver, then would it be the same thing? It could be, like, if potentially, like, for example, if he were buying futures contracts on gold, and he were doing that, pumping gold down and then selling his futures contracts, he could be that could be whatever, a problem, because he's pumping the value of these securities, right? But if he just went out and bought a bunch of gold coins and then pumps gold, it's a lot less clear. And so that's what the distinction is it's like, if he were buying Bitcoin futures contracts and then pumping Bitcoin or whatever, that's one thing. If he's just buying Bitcoin, which is trading on the spot market somewhere, like gold coins, like US gold eagles or whatever, why would you treat one like asset differently than another in that case? It's right now, the IRS, for example, treats crypto as property, which is the same as gold coins and so on. I think that makes sense. it's reasonable. They could probably help clarify some things a little better on taxes, but I think like the tax classification right now is pretty reasonable. There were people that were doing things like in the early days of crypto, like 1031, like kind of exchanges, like what you do for real estate. But I think people were really stretching it to try to do that. And I don't think the IRS has ever gone after anybody, but they did make clear that that's off the table. You can't do that, type of thing. So I think like on taxes, there's some things that could be clarified, and then definitely like the SEC needs to, it can actually help crypto by differentiating between what makes you a company versus a project that's simply developing for something that you don't own, you don't control. That's
But the government likes to regulate. So this is what the government essentially does, right or wrong, but this is what they do. And so they
well,
haven't regulated crypto yet. And I think they will. Somehow there will be more regulation coming, especially with stuff
I
like.
agree with you that more regulations are coming. I would say though that I'm not suggesting that anyone is going to take just a benign view of it. On the other hand, I do think that there are people like, okay, most of the people that are in the financial regulation arm, they actually come from banks. They're not people that are coming from like small community banks somewhere. They worked at Goldman Sachs, they worked at a big bank or a hedge fund or something like that. And so they actually see, and I don't think that's always a bad thing. They actually see that, hey, banks, for all their bad side, they are investing in startups, they're investing in new technologies and things like that. And that benefits the economy. And do we really want to stand in the way of that? And so something like this, where is there like I think that someone like a Gary Gensler would, what I've seen him speak several times, and what he said is, well, we've sort of kicked that can down the road of how we regulate this, but what we don't want to stand in the way of is innovation that's benefits people. And so we don't want to stifle innovation. On the other hand, we don't want there to be fraud or outright bad actors that are taking advantage of people. But on the other hand, if someone wants to gamble on Dogecoin or something like that, where it's not fraudulent, it's just a bad idea. Well, how is that worse than buying beachfront property in some place where you'll never get a return on your money? It's just as bad in my view. And there are a lot of people that put
Right,
money
but
in
real
the,
estate brokers who sell you have some legal responsibility on misrepresenting that property. Versus
but
right now, it seems Elon Musk has zero legal responsibility on misrepresenting Dogecoin to the moon.
but are they brokers? See, that's the thing. Are they acting in any kind of fiduciary role? Are they brokers or are they exchanges? And then how do you treat like a decentralized exchange where it's strictly peer-to-peer? It's peer-to-peer. Like I could, by the way, trade stocks peer-to-peer. I could go on eBay and say, I'm going to sell 100 shares of this stock, and and you pay me this, and I could sell the stock just that way without a broker. Now, would I want to do that? No, because then you'd have to like escrow it, and it'd take like 10 days or 20 days or whatever to do, whether it's instant if you use a stockbroker. So, but my point is it's not different from that kind of it's a peer-to-peer exchange on these decentralized exchanges. Whereas with the brokers are not, it's not like Bitcoin has an annual report or a 10K or I would say that maybe here's the maybe the other thing is that what some crypto exchanges were doing for a while is they were only allowing people that are considered accredited investors to invest. And what that basically means is that you have to have a, a significant amount of either assets or income. And like it's over like 200,000 a year for an individual, or over at least like say 1 million or 2 in assets. And if you could show that you had either the assets or the income, then they'd let you use it. And because you're basically signing an attestation that, hey, I could lose, $100,000 and it's not going to affect my life one way or the other. On the other hand, does that really make sense? I know people that have very little money, who they're great traders, and they're very sophisticated in the understanding of markets. And the reason they don't have money is they're just young and learning. But then I know people who are wealthy who are idiots when it comes to money. And so does having money, or just having a few gray hairs, mean that you've learned anything, or have you just had the same year for 60 years in a row? And
well, like somebody said, it's better to be lucky than smart. So
and I'd say certainly the intelligence sometimes works against people on something like trading, because they think they're smarter than the market, right? They think they're better than other people that are trading, and they end up getting surprised all the time. And what's worse is that people will invest with them because they talk like they're smart, but they can't actually produce. But I would just say that it comes down to, like, I think that something like the accredited investor rule, it would be a bad thing, because a lot of the people, most of the people that are invested in crypto, they tend to be younger. They tend to be people that are millennials or Zoomers in generation, and they see it as a more decentralized way of investing. And they like the fact that, like, for example, if you invest in a company, how much interaction can you have with the board or with the CEO? Almost none. I mean, you might be able to get invited to an analyst call, and maybe on 1 out of 10 of those analyst calls, you might be able to ask a question yourself, or you could go to a shareholders meeting and maybe talk with the people there. However, if you invest in a crypto project, which might have the same market cap, by the way, as a major stock corporation, you can go on their Discord and ask a question of the head of the whole project, and they'll respond to you in minutes, because it's a totally different ethic. It's a totally different mindset about what their relationship is to their work product and to the people that are investing with them. And I think that people that are younger, they don't like that artificial barrier and formality that is erected between them and their investment. And they see a legitimate crypto project, not something like
I think they also like the gains in crypto a lot more than the stock markets. I mean, just to be fair,
they like the what, though?
The gains in crypto are much higher and steeper than in the stock market. Just look at the Bitcoin and
Sure.
they all have triple-digit gains over a year. Versus
But realize the things that I'm talking about, like how, the reason why board members of a stock corporation or the CEO isn't interacting with people like that openly and transparently, is because if they did, their stock would look like a crypto. You see what I mean? That transparency creates a different dynamic in the performance of the asset itself, or is one of the things that does. And I think that this is a generation, or let's say a generation and a half, really the later millennials and Gen Z, that they've grown up in an era where everything is their life is an open book. And I didn't grow up in that era. I was Gen X. But, so the early part of my life was, there was no internet, or there were, computer networks, but it wasn't like anything like what is available now. And then most of my adult life has been with the internet. And I could, dip my toes in the water before jumping in all the way, because there wasn't the public, there weren't these types of things even available until recently. But I think these generations, they've grown up in a world where they've existed from the time they were very young, and they're natives to this world. And they want the companies that they invest in, or the ideas that they invest in, to reflect their world and to have the same kind of transparency and openness. And they don't like the artificiality and the barriers that a lot of traditional investments seem to erect between them and their money. So they're willing to put up with the risk if they have that open communication that lets them engage and buy into the idea. And that may be wrong thinking, but I'm involved in this world, and I see it every day. And as someone who invests in this space, it's just something that you have to be aware of and adapt to, even if it's not like, what's in your heart. You have to understand that this is what drives the market, is that the companies that are very open and transparent and build strong communities, they're the ones that tend to do well in the long run. And the ones that don't, they get marginalized over the long run.
So who do I call about my Dogecoin being down 40% today?
I think it's a good thing, actually. Even though the rest of crypto is down, I think that the meme, I call them, like meme coins, the idea that it's sort of driven by a meme and a lot of humor. And on the one hand, I mean, there's a certain like irrepressible kind of fun to it that nobody can really be against. But on the other hand, what it does, I think, is it creates this environment, or it creates an impression of people that are not invested in this space, that it's just a bunch of junk, and it's like these penny stocks or these dumb ideas that are based on a dog or something like that. And I'm a little surprised that it took off, because it was something that took off back in like 2017 during that bull market, but it was one, a lot more muted back then. It just sort of rallied along with everything else. But then second, there was nobody that was pumping it, all the way up, and no prominent person that was doing that. And there were other scams, things like BitConnect and so on, that were outright scams, and they were intended to defraud people. And some of those people have been prosecuted and so on. But Dogecoin was never a scam. It was always just this. It was first, intended to kind of make fun of, or just have something fun. And it wasn't a serious idea. And the fact that it went to, up to, 1 penny or something like that in 2017 just shocked even the people that created it. They never intended it to do that. But the fact that this was going up to, I forget what it was, as high as 75 cents, it's a little ridiculous. And I'm actually, if something like this is getting deflated, then that's not a bad thing in the long run. I think that what it's doing, though, because everything else is selling off, is to some degree that's the sell-off in Dogecoin causes a sell-off, or it exacerbates the sell-off in Bitcoin and more legitimate coins like Ether. It
Well, let's talk
exacerbates.
about Bitcoin, because it seems to about to break the support for the last couple of weeks or a month or so
Yeah.
at the 32,000 level, and
Well, I think that yeah, it's broken through a couple areas of support, and it's just above what I consider to be a critical support, which is right around the 30,000 level, and it really does need to bounce somewhere in here. The fact that I I would say one, there's going to be a little bit of pressure over on Bitcoin over the next few days. At least there's some option expirations that are happening at some of these offshore exchanges. It's not really U.S. investors involved in these, but it's a lot of volume at these exchanges that are options volume and futures volume, and that might put some pressure, but I would expect to see a balance here soon. I don't know when. If we continue to see strength in the stock market, then we'll probably see a balance here. Uh, and how high that balance goes, I don't know. We've not really seen any kind of retracement of that initial plunge. And that's a bit unusual, even in a bear market. If you go back to, I would say, especially in a bear market, if you go back to 2008 timeframe, or sorry, 2017, 18 timeframe, and we had this initial decline, and then there was a bounce that was pretty significant, much more significant in percent terms than what we had from the lows. So, or we had this type of retracement move that was from the original collapse. But it's been different this time. There was this ramp up. We're really at and something like, well, both Bitcoin and Ether, although I would like them to be at higher levels, I think that Ether really needs to be above the 2000 level to be and kind of even have the future, near-term future of a bull market resuming at some point, or Bitcoin needs to get back above really 36,000 level, I would say, for the same thing to be true there. There's still, right back. Bitcoin is back to where it was in January right now, and Ether is back to where it was in as recently as January, February. So it's not like, although these declines have been, they're more like 60% or so, it was, it's still up significantly from a year ago. And but I would say that being below this, a lot of these support levels, it's not good for it's a very bearish setup. Ether has gone today right down to its 200-day moving average. It's the first time it's touched it since April of last year. Now, if it plunges through, then that's probably a pretty bearish setup in the near term. It's not to say that it can't go right back through it. It can, but it's just going. It's just indicating that it might continue going down. I think that the irony is that adoption, and if there are things that we can look at that we probably don't have time today, but there are some like fundamental on-chain statistics that indicate that we're pretty much at an oversold level now, depending on how you characterize this. Definitely, there's a lot of fear in this market, and I would say there's no euphoria left in this market. It's been punched right out. So I've not seen this much. I mean, just anecdotally, I've not seen this much bearishness since really March of 2020. Maybe it was the last time, but it very much like 2018, late 2018, level of bearishness and negativity. And that's not to say that it marks a bottom, but I would say at pretty much every bottom, you do have that kind of negativity. And so it doesn't guarantee a bottom, but it
Right.
corresponds to one pretty well.
And just to add to the negativity, I'm not sure if you saw over the weekend, Michael J. Burry, before he deleted his Twitter account altogether, tweeted that Bitcoin is now has a head and shoulder pattern on the chart. Do you agree?
Well, but so here's a guy who's a quant trader who's now citing head and shoulder patterns. I mean, see, it's kind of like, to me, that's ridiculous. I mean, it'd be like Victor Niederhopper, well, it's head and shoulder. I'm going to trade off of that. And by the way, both Burry as well as I forget, there was another trader who came out over the weekend, and they both said, Burry was asked, "Do you have a position in Bitcoin?" He said, "No, it could go either way. I'm not going to go long or short Bitcoin." And so, yeah, in a way, it's like,
could be short MicroStrategy. Many traders who want to short Bitcoin simply just short MicroStrategy, MSTR stock, because he's Michael Saylor owns a lot of Bitcoin, and now that he has tweeted what his average price, he actually tweeted his average price is $26,080 per Bitcoin
yeah.
after the recent purchase. So I'm not sure why would he do that, because now to me this is like a target for Bitcoin, where everybody is looking at, well, what happens if Bitcoin trades at 26,000? Would he have to liquidate? What happens to his equity value? So many people are actually short MSTR who have a negative view on Bitcoin.
Well, so that's why there are markets. And
it was down today 10% because obviously
Bitcoin. But Bitcoin was down. So Bitcoin was down over 10%. So it was just in line with Bitcoin. But my point is just that that's why there are markets, that people can take a position, or for that matter, I mean, they'd be like Michael Burry and not take a position and still spout off about it,
right?
Because they have a microphone. And there's a lot more people like that than people who actually have the courage of their conviction, and they'll back up their, whatever they say with real money and put the money on the line. Well, like, for whatever we say about Michael Saylor, I think he's almost a little kind of cultish, about his involvement with Bitcoin. I mean, I think that any healthy investing approach, you should have a little bit of emotional distance from your investment. And that's not to say that you can't really want to hold on to something, but that's certainly not like a good, especially if you're a professional investor or you're doing it for a living, then you simply can't have that kind of attitude toward your investments. You have to be a bit removed from it and be able to sell if that's really the right thing for your portfolio or for your company. And he happens to own a majority of the stock of MicroStrategy, the vast majority. And so even the board couldn't push him out. He can elect new board members if they try to push him out. But on the other hand, is he doing the right thing for his shareholders by doing that? I would say if he were both investing in Bitcoin and he said, we have a hedging strategy and we have ways of mitigating our risk, our downside risk, and things like that.
Well, his hedging strategy is basically to issue more junk bonds to buy Bitcoin.
Right, which is the opposite of a hedging strategy, right? And so what I'm saying,
hedge, is that what they call Texas hedge?
Yeah, I actually think it's good that companies consider putting it on their treasury. I think I have talked with several professional risk managers, money managers who they believe in having some Bitcoin allocation or other crypto allocation, even if they're managing majority stock portfolios or stocks and bonds. They'll have some like 3% in cryptocurrency, and they see it as a good diversifier. And they make there are a lot of papers to support this, by the way, that are academic papers and not just some research report from a bank or something. And so, but I think the idea that you would, if with a company that is a company that really they produce a software product or a set of cloud software products, I mean, they should be hedging rather than leveraging up to their treasury investments, and would be, I think, the smart thing to do. So if he said, well, we've acquired 100,000 Bitcoin, but we hedge because we want to ensure that we retain the value, and we may lose a little bit of upside with our hedges, but we also don't experience the same downside. That would be, I think, a really smart thing to do. But because he is actually leveraging his company up, it just seems to be, a little bit incautious, and maybe not the right approach. That's my view. But I'm believe me, I'm a huge crypto bull, and I believe in the idea. I just don't think I don't think it's good to be so emotionally involved that you can't see. Well, this is a risk asset, is what it comes down to. That we're looking right now at Dogecoin, which not even. I mean, it's more of a super speculative asset, but even something like Bitcoin, it's a risk asset. And when the last time it topped out, or this time it topped out, I think actually it didn't correspond with the topping out in other risk assets. That actually happened back in February, which this top corresponded with other risk assets topping out, but it went on to higher highs. But in 2017, 18, it topped out along with other risk assets, and then went down in 2018 along with other risk assets. So I'm not saying that history has to repeat, but I would expect Bitcoin to have some correlation, non-zero correlation, with other risk assets. And
which is very interesting that today the market ran up
right.
in face of Bitcoin and other crypto selling off hugely. It wasn't just a little sell-off. It's a very large sell-off.
Right. Well, when I see things like this happen, and like what we're seeing right now, and when I see this happen, I actually think that there's some other things at play that are hard to know what they are. And here's just some examples of things that it could be. That there could be one or two players that, we were talking about, well, the shorts of bonds got, stopped out and so on. Well, it could be that the same funds that were short bonds and long a lot of these commodities and so on, that they got hit both ways, and now they've got to get liquidity back in their portfolio because they got hit. And where are they going to get liquidity? Well, in one of the most liquid markets there are, crypto. So they sell their crypto. And so it seems like, well, everything else is going up. Why isn't this going up? It's because there are a handful of players that have gotten kind of smoked over the last week with this, maybe the market moved more violently after the Fed meeting. And I think it caught some people that also play in a crypto market by surprise, and they've had to reduce their exposure. And by the way, when the volatility, because of the way that funds manage their money now, they tend to follow this kind of risk parity allocation, that when Bitcoin goes down a lot, or the Ether goes down, they have to sell more, because the higher volatility means that they have to reduce their exposure even more. And so it's things like that that I think, in other words, what I'm saying, I think that what we saw today and on Friday, or over the weekend, that it was because of institutional behavior, and less so retail traders and more institutions. And now the thing about institutions is, okay, if an institution, they reduce their exposure and they stop, then you see markets reverse pretty quickly after that pressure gets taken off. So who knows? I don't. What we don't know is how large that, if they have to reduce their exposure, how large is that position, and where does it? But I think that something like Dogecoin, I don't think there are a lot of institutions putting their money on Dogecoin. Um, that's just selling off, because money's coming out of the crypto market, and in general, coming out of the asset class. And actually, when people are selling Dogecoin, they increasingly are going to something like dollars, but they're going back into Bitcoin. And so that's why Bitcoin looks a lot stronger than Dogecoin is, because they're selling Dogecoin for Bitcoin. And and so it'll hold its value better, is what the perception is. I think the reality is it'll hold its value a lot better in a downtrend. But I think that, my view is, I think consistent, that I think that this is done for this cycle. Maybe at some future point there will be some other pump, but I don't think, this is a good one to jump in, try to catch a falling knife and jump in on. And if this goes down enough, then Elon Musk won't touch it with a 10-foot pole. He won't be pumping it anymore if it goes back down below 10 cents or something like that. So I would say that, what that the value is in the top tier ones, and in the highest market cap ones. Those tend to be, not all of them are great, but those definitely Bitcoin, and I think Ether and some of the other top market cap coins are the ones to look at and study, versus a Doge. It may be fun, and I think a lot of retail investors, they went into Dogecoin because it was unintimidating and fun, and they have this like fun community and people that tweet about it, and so on, and it just makes it kind of non-threatening and fun. And because the price is low relatively, someone could buy whatever 10,000 and feel like, even though there's like 100 trillion of them or something like that, they could feel like, well, I'm like, I bought a whole block of Dogecoin or something like that. And when it's, $250 or something like that. So it's so I think there's a lot of there was some of these dynamics that, and then social media have been the big drivers, but I think it's probably done for this cycle.
Right. And just like at the end of last week, we were saying we had this divergence between S&P and NASDAQ, when NASDAQ was going up and S&P 500 sold off. So today, this divergence was almost fixed. While ES was up over 1.5%, NASDAQ was up only half of that. So the divergence is fixed, and Russell also was up 2.35%. Completely reversing Friday losses, while Nasdaq underperformed. So to me, I see the same divergence between crypto and the stock market.
But what surprisingly, we saw the Russell 2000 was up over 2% today, and so small caps. But I think that if there is a correlation with the market, then crypto tends to be more correlated with big tech than any other part of the market. So like the Apple, FANG stocks, whatever, and tends to be more correlated with those. And since NASDAQ was up a lot less than the Russell 2000, I would guess, XOK, right, is tech.
Okay, yeah.
And so that was less than 1%. So it underperformed the S&P 500, as well as right in line with NASDAQ pretty much, but definitely underperformed.
Yeah,
so but it
the
wasn't down 10% like Bitcoin.
right. But what I'm saying is I think that either crypto, well, Bitcoin especially, reverses at this level, maybe undercuts 30,000 and reverses back up, or the NASDAQ and the market is going to sell off significantly as well in sympathy. Because this
Oh, that's a good observation. I think that there have been a number of cases in the past where crypto has led the stock market. And 2018 was a good example of that. And then in 2018, 19, we saw a lot of examples of that. It recovered first from the lows in 2018. And so that's definitely a possibility. If it continues going down while the market's going up. The one thing I do like to watch, given that we just had this volatility, and it almost looks like, I mean, it doesn't even look like any real volatility. It doesn't, even though it's, been, a lot of gyrations in the market. It looks much more severe in S&P 500 than it is. But I like to watch the VIX because I think that what you tend to see in the late cycle is that the VIX will start to rally even as the market is rallying, and that's a warning sign. And when the VIX starts going up at the same time as the market, it's unsustainable. It means that something's about to break. So it really pulled back today after going up a lot on Friday, but I would just say, and it is at a low, so it's not anything that concerns me right now. But if we started to see an uptrend in this, even as the market is rallying, and then if we saw continued weakness in crypto, which I would guess that tomorrow we'll see a rally in crypto or an attempt to bounce. Whether or not that succeeds is another matter, but I think that the sentiment was so extreme today that we probably will see some kind of relief rally. But I'd say the real warning sign for me would be crypto selling off, VIX rallying, and then the stock market continuing to rally. And that's a sign that something's about to break somewhere. Something could break somewhere, but I'm not predicting that. I think there are some signs that that have really worked pretty well over the last 3-4 years. And the real warning sign is the VIX going up while markets at least stay, they're not declining sharply. But then I think also, as you pointed out, crypto, if it's staying in bear mode and not rallying with other things, at least keeping pace, that's a big warning. That's a big red flag. Because it is an indicator of risk tolerance, and somebody somewhere is pulling off risk exposure for whatever reason.
Right. Well, I think we've gone long enough today. It was a lot to discuss.
Yeah, we're going to be experimenting with some changes to the format over the next few weeks. And so we'll be trying some different things, perhaps having some special guests, some people that we'll interview that are in the markets that would be of interest. So watch for that. And that'll be coming over the next few weeks. Won't be all changes at once, but we'll be making a few changes over time. So thank you for watching.
Thank you for watching, and feel free to comment with questions, suggestions, and we'll see you back on Wednesday.